Today guys, I want to teach you about ranges. Let's talk about actual ranges, how you can use my one candle theory to identify ranges, and how to actually navigate them. Ranges are everything in ICT. Everything ICT related is based around liquidity. As we all know, any fair value gap, any order block, any breaker block, all of it is based around liquidity. Liquidity comes in the form of ranges. Ranges are the easiest way to identify liquidity. Identify, more importantly, the correct liquidity. In this video, I'm teaching you how to identify that correct liquidity so you're on side with the market. You will never be offside with the market after this video. Let's dive straight into this. Euro USD hourly chart. We have obviously a market maker sell model in action right now. Now, just for clarity's sake, I do think we are still bearish on Euro USD. Obviously, it is the weekend currently as I make this, and I took a trade in here with my Discord. I called the high here, and I said this fair value gap should hold, and we did actually drop from there. Now, this price action was a bit choppy. Forex has been a bit choppy recently. Nevertheless, I used a range inside here to call this move all the way down to there. That is the move we capitalized on inside my Discord. So how did I identify this? Well, I looked at a market maker model. A market maker model has a few stages. We have a consolidation, we have accumulation, more accumulation, and then a smart money reversal. Now this here is all the buy side of the curve. A consolidation, accumulation, reaccumulation, smart money reversal. This is not important. This is just areas where institutions and institutional minded traders like yourself, or like you want to become, previously bought. Now, if we switch bias at the smart money reversal, we not always switch bias at a smart money reversal. Lots of people would call this a smart money reversal just because we started going lower. It is not a smart money reversal until we hit a key level, guys. That is what you guys need to understand. Key level being a key liquidity pool or a key premium array. Then it becomes a smart money reversal. It is also then confirmed by trading through a breaker. Now, if I remove all of this noise and keep the consolidation, the smart money reversal, a breaker is this, right? How buy side, sell side, buy side drop below. Strong drop below. Notice the momentum in that move down. Now that is the algorithm tipping its hand to you guys. That is not a coincidence. We need displacement in a market to identify when it is actually going to move. Now, once we trade through the breaker, we can confirm our smart money reversal. So we would assume this is the high. You would also use intermarket analysis, so SMT, and intermarket analysis in the sense of which pair is stronger out of euro and pound. Now, I'm not going to dive into that into this video. That is reserved for my Discord. Those are the sort of things I teach to my Discord, and it is currently not open, so I can't teach that yet. I'm sure you guys understand. What I will be teaching is the correct ranges to use. Now, once you have confirmed we're in a sell model, I said all of that just to confirm we're in a sell model. Now, confirmation is key, guys. That's why it took 4 minutes to explain all of that. Now we can get into the use of ranges, the proper use of ranges. So in the middle of a market maker sell model, we need to build up buy side liquidity. There needs to be willing buyers even though we want to distribute to the lows, because if we are selling, we want to offset our positions to willing buyers. So how do we get willing buyers in the market? Or rather, how does the algorithm get willing buyers into the market? It uses ranges, guys. Very important. The algorithm uses ranges to get willing buyers into the market, so smart money like ourselves can offset our sell positions to those willing buyers. Now that is a handful, that's a mouthful. Go back and really take that in. That's the logic behind the charts. That's what no one explains. Now, here we have a consolidation. A consolidation is naturally a range. Usually, on a pair like Euro USD, which is a USD major, we consolidate during Asia, or we like to see a consolidation during Asia. Now, this consolidation is during Asia and part of the previous day range. This is a previous day range. So what is the range of this previous day? We have this high, we have this low. Those are the extremities before we go into Wednesday. So look, Wednesday opens up there. If you look at the bottom of my screen, you can see that's the start of Wednesday. Tuesday is here to down there, right? So the extremities just before Tuesday is this high, this low. This is your range. If we removed all of this, let's actually do that. This would be a consolidation, right? Naturally, this is a consolidation. You have the highest high and the lowest low. We are working inside, in between the highest high and the lowest low. We are not moving outside of it like this with speed and momentum. We are simply not doing that. We are working within a range. So if we jump back to normal time, you can see how we utilize this range. How do we trick willing buyers in? Well, first of all, we drive it below the low. So we drive it below the lowest low of the dealing range. Dealing range being this consolidation. They drive it below the lowest low. So what are people doing? If I get rid of all this noise here, what are people doing below this low? They are buying, right? A lot of people on YouTube and their subscribers are buying this because they think it is going up here. They say shift in market structure, right? That's what you hear all the time on YouTube, shift in market structure. This is the liquidity. This is just a liquidity grab. There's a shift in market structure. When you guys who listen to me and actually pay attention, know we're in a larger market maker sell model. This is the long-term target. So why would a shift up here, or rather a move up here, be a shift in market structure? We're not going for this high. We're not interested in this buy side liquidity. We are under the assumption that we've done enough at these highs. So we are long-term bearish. This to us is just building liquidity. Of course it is. We're building sellers here. Why are we building, buyers? We're building buyers here. Why are we building buyers? Remember what I told you guys. We need willing buyers to offset our positions to. So if we first put buyers into the market and then over here we ram it up above this high here. Remember our range, this high, this low, the previous day range. If we ram it up here, look at this, and I get rid of this. Look at this, buyers, sellers, actual selling. This is where we are looking at. Now you don't have to catch the very top. If you are not confident to get in above here, that is fine. Often I don't get in above there. Sometimes I will short something like that because it is, I've been doing this a long time. I know what my A+ setup looks like. If you haven't established that yet, just come to terms with liquidity, key liquidity terms, okay? Now, you don't have to catch this short, but if you understand the logic of people bought down here and actual smart money sold up here, why did we sell? Because below these lows, people are going to be taking profit. Because where are the stop losses of those that bought here? Below here, below there, below there, okay, and obviously below here. Stop losses are all along here. Notice how they are all higher lows, so it's easy, low resistance liquidity. You can ram it down there quick, snappy price action. Get right below the lows in an instant, okay? Now, when I saw this fair value gap created, the logic was, okay, we've got all this sell side liquidity down here. We've used this range to induce buyers first. Induce buyers below this low. Remember that. Below this low here, everyone's buying. Everyone thinks it's going to reverse. Liquidity grab, right? Shift in market structure. Target this. No. Completely wrong. Completely offside with the market. That is what you find so much with these mentors who don't really know what they're talking about. They don't really know the underpinnings of the marketplace, the logic. That's what I always talk about, guys. I do this in my Discord as well. I talk about logic. It's all about logic. The members in my Discord know I go on about logic all the time. They're probably sick of hearing it, but it's the underpinnings of the marketplace. So take a look. This for value gap. Why this for value gap? Because we've had a smart money reversal. We've had a low risk sell, distribution, redistribution. Now the second level of redistribution is a secret I'm not willing to dive into yet. Simple. And I know that sounds harsh. You guys do not need to know about that yet. Again, that's something I teach privately. That is not something you need to know. But the second level of redistribution in a market maker sell model is the gold you are looking for. You can go searching for it on YouTube. Don't be taught wrong though. There is a lot of logic behind it, but there is also a lot of mechanical things you need to know before you can trade a second level of redistribution, an actual second level of redistribution. But nevertheless, this is my A+++ setup. And I knew we shouldn't come back above this high. Why? Again, guys, logic. Think about logic. Why do we not need to come back above here? Because the buyers are down here. People have already bought. Again, refer to what I said in the 5th, 6th minute mark, wherever that is. I said we need willing buyers to offset our sell positions too. Willing buyers down here. Where do we reject from? Where do we move from? Below these lows, guys, okay? It's repeated logic. Look, where do we start to stall? Below this low. The extreme low that took out this range low. Okay? Do you see how it's all coming together now? So, sellers above here, that's the actual high. Because we had this range. A dealing range. An actual range to utilize. That's the thing. It's not just a random range. It's a range to utilize. To utilize sellers and buyers. That's all it ever is. There is only ever two participants in a marketplace, sellers and buyers. If you are on side with where price is reaching for, you need to utilize the other side of that market. Seriously, guys, rewind and listen to that over and over again. Write it down and pin it on your wall. You need to use the other side of the market. If you are 100% convinced price is reaching for something, okay, buy side or sell side liquidity, you need to use that other side of your market to your advantage. We are doing it here. Willing buyers are being used to our advantage because we sold here, offsetted our position below this low. Now, I do still think we're going down here in the long run. And you could offset position down here. Right now, the market is choppy. Why? Because it's January. January is a month where institutions are not really heavy in the markets. A lot of their money is liquid. They're not heavy in positions in the market. Makes me a bit more cautious with my take profits and things like that. Nevertheless, guys, all of this logic is from this range. Okay? Now, why did I teach you one candle theory? Was it random? Why did I teach you this? Because this range is a candle. Okay? Candles represent time. That is it. Candles only represent price and time. Time then price. They must show time, but not all time and not all price is important. Price at specific times, at certain times, is not important. Only price at specific times, key times, is important. This candle is just a representation of price when it is not important. Why? Because it's consolidated. It's in the middle. It needs to build liquidity. We've not built enough liquidity to distribute to this low. We haven't done that yet. Okay? So it's a range. What is a range? This is a range. Do you see? Also, notice how the midpoint of a candle and the low of a candle can be used as a range also. If I remove everything on our screen, and then I mark up the low and the midpoint of this candle, eyeball it, it's about there. Okay? Where do you think this is going to show up when I drop to that hourly chart? This is why I say one candle. It's not a marketing gimmick like a lot of these things are. It's not to rope you into my Discord. I do not care who joins my Discord. I do not care who follows me on YouTube. I don't do this for subscribers. I do this because these concepts are taught wrong all of the time. And they're taught by people who do not make money trading. And that doesn't sit right with me. I'm not going to get into a rant, but why do I say you need one candle? Because specific parts of a candle at specific key liquidity points. What do you think this is going to look like when I drop to the hourly chart? If we do it properly, look at that. The swing high that we used. Is this not the same range as I was showing? Midpoint, low. Is this not the same range? Now, premium and discount is not just premium and discount. It's not as simple as this, okay? It can be as simple as this, but premium and discount is not just this, right? It is so much more than this. It is so much more than that. Premium discount can be a candle's premium and discount. Measure that, and then think about how, if I do that, think about how below here is a discount. Of course it's a discount because it's below an old low. Think about this is a premium of what? This candle. Because it's a range. It's a range in itself. So why did this high inside the candle, why is this a key high? Why do you think? Because if you take this candle's range, it's above 50%. So where are smart money going to be positioning themselves? Above 50% in a premium market. Where are dumb money going to be positioning themselves? Below old lows. They're going to be buying up in a sell program. Because we are coming down here. Now that is the base of absolutely everything I'm showing you. We expect it to come down here. That is the very first thing you must understand and you must establish with yourself. Where do I think price is going? Now all of this, absolutely everything I've showed you today, and this is an absolute masterclass. I've dived into this. I didn't want to go this deep, but in these charts sometimes I get carried away. It's really fascinating. All of this, none of it matters unless you think it's going down here with absolute certainty, absolute confidence. And if it doesn't go down here, that's fine. You can still capitalize on that. But you think with certainty and confidence that it's going down here. If you have no bias, forget everything. Forget it. Get off of this pair. Simple as that, guys. Seriously, get off of the pair. It's not of interest to us. Okay? Now, this is really advanced. This high was a specific high used because of that candle's range. It's in a premium, right? Candles are premium and discount. And I didn't want to share that, but nevertheless, we're here now. You know, I'm 18 minutes deep and I may as well. I don't expect many people, to make it this deep into the video. Now, if you did make it this deep into the video, comment candles are premium and discount. Okay, I want to see how many of you actually make it to the end of my videos, because this is valuable information. Candles are premium and discount. Comment that. And I don't expect to get a lot of you commenting that, because this is a really deep dive. But if we get a few, that will be enough for me to continue these videos, continue diving deep like this. This is complicated and it will take a lot of teaching. It will take a lot of my time, but that is fine with me. I've got plenty of time because I trade these markets and I don't need to be trading all the time. I make my money and then I get out. So candles are premium and discount. Comment that below and that will let me know how many of you want these videos to actually continue. I can dive deeper into this and deeper into market maker models in general. There is so much to this pattern on your screen. Consolidation, accumulation, reaccumulation, smart money reversal, and the stages of distribution. There is so much more to this. Again, it's not just a pattern. I'm doing it quite an injustice by calling it a pattern, but nevertheless, there is so much more to this that I feel like people aren't teaching correct. I've gone through hours and hours and hours of content, guys. Like, I've really dived into this. So when you hear me talk about it, this is why it sounds different from your average mentor. Now, I don't mean to come on here and bash mentors. It's just a lot of people become mentors, so-called mentors, because it's an easy thing to do. It's easy to trick people who haven't made it yet. Now, there are great ICT mentors, like the space has a few. I'm not going to say names, but go on my following list on Twitter. There's a good few for you, right? But there's a lot of fakes, and I don't like that. That doesn't sit right with me. So 2025, we are washing them out. We are blowing them out of the water with actual logic and narrative, and we are going to change the way people view these markets. Nevertheless, if you are new to my channel and you enjoy this content, please do subscribe, turn on post notifications so you never miss a video, drop a like, and join my Telegram below. The Telegram is where I update, and Twitter as well. The Telegram is where I update with mentorship when it is open. It's not currently open, but in a few months I will open it up for new members. That is where I update everything. I will be making a free section in my Discord as well for those of you who are interested in learning deeper and eventually joining my mentorship. I will open up a free section, but to keep up to date of when that's coming out, join the Telegram below. Drop a comment, and remember, candles are premium and discount if you did make it this far. I appreciate your time, and I appreciate you making it this far into the video. Every single one of you inspire me to continue these videos, and every time I get sent results, that really, really does inspire me and motivate me. So thank you as always for watching, and I'll catch you guys in the next one.